What's going on, ladies and gents? It's your boy Henry, and today we are here with another market update. So we're going to kick it off with the Market Watch economic calendar, and this is just to see what we got on the table this week, because we do have jobless claims, and we do have the summit where Powell is going to be speaking. And if we've learned anything about when Powell speaks over the past, I don't know, honestly, this whole bear market, the market tends to hype him up. So I mean, something big usually happens, and it's usually the opposite of what is happening going into it. So if we fall going into that summit, like into Friday, so if we fall into be there, so it'd be that day right there. So if we fall going into this day, I will make this one. We can make this that color, okay, pink. If we fall into Friday, then I would expect on Friday we are going to start probably rocketing off of when he's going to be speaking, which is going to be in the morning at 10 a.m. And then this is probably going to be important, these right here. But yeah, they're all going to be coming out, and that's probably what he's going to be speaking about. And if they have lower expectations, right, if these are good expectations, then the market's probably going to rally, okay? And so you're probably wondering what these are, okay? So I went ahead of time. I put the September FOMC dates on our chart. And it is a lot later in the month than I thought. Okay, so if they're going to be raising rates, it would be at this next FOMC meeting. And it's like a ways of ways, guys. It's a ways guys. Like it is like, let's just look at how many trading sessions we have from here until then. We have 19 bars, so that's like, yeah, we have pretty much exactly a month, and a lot can happen in a month, guys. Like we could have a lot of sideways action. I introduced the fact that we could honestly just go sideways for the next like few months. Like everyone and their mothers could be tricked for a very long time because the market could just be so uncertain. And I mean, that could really happen. Okay, we could stay in this range for quite some time, guys. We don't have to go to all-time highs. We don't have to go all the way back down here to COVID lows or anything. I mean, it doesn't have to be any massive crash. We could just keep, the dealers keep winning in the bear market. And honestly, that's kind of what's happened. We talked about up here how everyone was just bullish. All right, I was talking about how like people in my life that do not talk about the market were just saying to me randomly in conversation when I saw them, like, hey, the market's going up. And that's when I'm like, hey, nah, that's when the dealers are going to start rug pulling, all right? Because, like, I see it every day. You guys see it every day, all right? But, like, people I work with and just honestly, just people in my life, they don't watch the market like we do, all right? Or I don't know if you guys, maybe that's why you guys like this channel. Maybe you guys just get here. This is the one stop stock market stop. Like, maybe this is the one-stop channel and you get all your info here. I don't know. But I mean, I'm pretty obsessed with the market, and even though I don't just sit here watching charts all day, I mean, it's still me checking every now and then. Like today, I was just adjusting my positions when I was just seeing certain things on the chart, and I actually went long, and I cut my long position right here. But I'm gonna introduce you guys to what I'm doing, because I got on. So I cut my entire short position, right? Because I mean, I wasn't gonna sacrifice like 50 to 60% gains, right, across my contracts. Like there was no reason to. All right, and I figured we were going to start bouncing, and I cut it was earlier into the day, and then I went long, okay, and it was going well for a little while. So I set it in the, I'm gonna actually go delete that because I'm not even long on the market anymore. But what I did introduce is a hedge, okay, and the reason I went long is I want to play this VIX gap fill, since VIX fills its gaps 100% of the time. But if you guys listen to yesterday's video, I expected that this was going to be a breakaway gap. This morning it was looking like it was more like an exhaustion gap. If we don't see a close over here, over this 200 MA today on the VIX, then I mean, it really could be looking like an exhaustion gap. So I don't know. But that's why I originally cut the short position. Now I actually have almost the whole short position back, except I probably have like a quarter of it not in. And where did that money go? That money went towards a, well, not all of it, but a lot of that money went towards a hedge. So instead of playing, so I cut my SPY calls, and where did I cut those SPY calls? I cut them like right up here for a slight loss. But I got just about back to break even. But I cut right here because I saw a, what's it called? Or was it? Okay, so these charts are actually different from Webull because I swear it was a bearish divergence on the 3-minute chart that made me cut my calls, and it was this peak right here was a bearish divergence on the CCI and Webull. So yeah, I don't know why it's so different here, but that's something to note. They are definitely very different here. But yeah, we did end up getting that. And so what I'm doing is I cut those and I introduced I didn't introduce the hedge, but I just added more. I did not cut my VIX puts. So I added the $23 VIX puts, and I did that because they're going to run in the money, and that's going to be about 100% gain whenever VIX does decide to go fill that gap. Okay, it doesn't even have to happen before we get a massive gain on the VIX contracts. That's why I called it a hedge. So I'm pretty much on both sides right now, way more on the long side on the VIX than the short side. But either way, that hedge, I don't really care what happens to that hedge because, like, first of all, I did secure like some valid gains, and I did get to add them back at a decently lower price. So all my contracts, I was able to add, like, I was able to get a pretty big chunk out of what I got the contracts at. So I mean, it was a dub in my book. Okay, it was a dub. I got like 30 to 40 bucks out of each contract, which is just valid. Okay, it's very valid. And like, I didn't even want to adjust, I just did. But the reason I didn't adjust, the reason I like went back, I cut my long position, I didn't even want to play it, is just because of this. Like, look at this weekly time frame. Okay, look at this. This weekly time frame suggests that we're just getting warmed up. Like, every time you get the cross here, it is the week before you start moving up. All right, like, look at this. You crossed as of this week right here. It was literally the bottom week, and then the next, it was the same exact thing right here. Then you start going up. You crossed here, it was this week right here, and then you started going up. You crossed, okay, I guess this isn't really much here, but you get exactly what I'm saying. All right, like, when you have these big moves, it's like you cross down here. Look at this. All right, so you crossed pretty much right here on this week. You crossed, or it was this week, and then, like, if you just measure, like, within a few weeks, dude, look at that big spike. Give me my 45% VIX spike from this week right here. Okay, so like, if we went like this, like 45%, yeah, it would bring us almost up to our target. The gains would be immaculate. All right, but yeah, I just wanted to let you guys know at the beginning of the video, so before we really start the analysis, which honestly is pretty quick. Okay, everything's pretty much the same, except we talked about the economic calendar. They have the Jackson Hole, they call it the Jackson Hole retreat. Jackson Hole Summit is what I just was calling it. I thought it was called the Jackson Hole Summit. I guess they're not calling it that. But yeah, I do think, like, when they talk, like, we could potentially, like, we could, over the next, like, going into that, okay, maybe we start heading down. Okay, but then, like, you know, okay, who says we don't rally going into, or like, maybe we start turning around and we start, like, the VIX comes and fills this gap, okay, going into Friday. So it would be going into the 20. Would it? Did I do something wrong here? All right, so I'm so confused. So it's Tuesday, Wednesday, Thursday, Friday. Okay, so I think I have the wrong day over here. Do I have the wrong one? No, I have the right one. I'm completely bugging. I am so sorry. But yeah, who says we don't come back down here and come fill this gap going into it, and then rally going into it, or we keep going up, and then, like, maybe we don't hit this target, but maybe then we start reversing, and that's when the market starts rallying, and that's when VIX starts reversing down, and then it fills the gap, and then you have that little relief, like a few weeks of relief, and then boom, we continue on. But that's why, like, originally I had the thought to take the profits, because I was like, you know what, like, there is a probability that we are going to be rallying, and I think I saw a divergence, so that's what got me nervous. Or I was just seeing not on the VIX. Actually, let's look at, do we have any divergence on the VIX? I want to see. We did have, we called out this divergence. It actually was no, not that one. It was this one. This was the final divergence that was formed on the VIX. That is pretty cool. Or you also had this, where you slightly went down here, and then you slightly went up there, you know? So maybe that was your final divergence before takeoff. Let's get rid of that magnet right there. But yeah, guys, I'm just I just really don't think you are going to go too much further, even if you do rally up. So I know there's a lot on the chart here, but I want you just to forget about everything else and just focus on this big ass white trend line here, right? So we're gonna adjust that. Yeah, like look at how like close we are to it. And I got it a little off, but even if we rally up, like we're not going too far up. Like, and I don't think we're going to break this trend line before we have our weekly sell-off. Like, look at that. That would be an insane, that means an insane amount of buying pressure would come in if you're breaking this trend line. At the same time, keep in mind, NASDAQ did break in. You didn't get that insane amount of buying pressure, I guess. Like, people probably got bull trapped here. But I think the SPY is going to be respecting it. It looks like it did that time around. And I do think it's going to keep respecting it until like it finally breaks out. And I don't think it makes sense on this weekly time frame for us to break out. Like, yes, on the monthly time frame, it looks like we have bottom. I said that like weeks ago. All right, weeks ago we said that. All right, but on this weekly time frame, look at where you are now. All right, and when you cross, like it's meaningful. All right, look at where you went. You had so many red weeks on the SPY. This is terrible, and it was just from you being halfway up. Imagine falling from down here or up here, and I'm not saying this doesn't happen where you just like stay up here, you crossed here, and you just literally stay up here and you trade in this range of, what is this? This is a range of 30 bucks. Like, who says you don't do this? I'm not saying that at all, okay? But what I am saying is that was before the bear market started. I don't expect conditions that were or signals that were being had, or I guess conditions. I don't expect conditions that were being met outside of the bear market to be met inside of the bear market, if that makes sense. I probably worded that very wrong. There probably was better terms I could have used there, or probably were, but it's whatever. But yeah, I just don't expect you to break that trend line. So like, look at the worst case scenario. You're coming up, like if you take all this time in the world till the next September meeting, boom, you have that. So that's why I think it really does make sense that you fall before that, okay? And that's why I wanted that on a chart, just so we always can keep that in mind going into that. Because honestly, in my opinion, it makes sense to, like, I mean, look, guys, like this thing is getting close. So you're either going to break it, get shoved down, or you're going to get shoved down a little, which this is likely what I think is going to happen. I think you're going to get shoved down a little. Maybe you're going to come into this golden pocket. We are toying with golden Fibonacci's. Only golden pockets. I don't care about anything else on the Fibonacci, because like, look at how well respected this golden pocket is respected right here. It is beautiful how it literally just came up to it and tapped in, just like QQQ. It came up to and tapped it. That is literally how we got a top there. Aside from when we were saying we are expecting topping tails to be coming on this day, which we literally got. So that is pretty cool. I said I thought this day was going to mark the top, and look, the next day we started dying. So, or is this day? I don't. Yeah. Actually, no, it was this day, Friday. That was the day that I thought was going to be marking the top. And look, that was the first day we started falling. So I either thought we were going to come up here, make our topping tail, or I mean, hey, look, we literally started marking the top with a downfall. But yeah, guys, you are curling up, and this is what I was seeing this morning that was just having me nervous. All right, it was just having me nervous, and when you're nervous, like, hey, you know what? Get that under control immediately. And I started thinking about it. And that's why I took myself out of the long position and kept the hedge. And it's specifically because I noticed my emotions were coming. I was just out and about, and I noticed my emotions were completely coming into the mix. And I was like, wait a minute, why is this happening? It wasn't happening all this time. Not at all. Why is it happening now? And why is it happening? It's because I had too much that I was uncomfortable with it. All right. Like the conditions, if you're in long short contracts, like if they're long dated short contracts, you're chilling. Okay, you are chilling. Okay, I still do think VIX, this gap is going to be filled, but I don't know if you are going to be running like a decent amount further before doing that. Okay, who says the contracts that we're in aren't going to run to around that 100% mark? Now I took the profits and literally re-entered most of the position. So I secured the profits, and now I guess it's a new entry for me. But like I said, I got like 30 to 40 bucks off each contract. So I mean, that adds up. That was pretty nice. And now I'm just like, I can afford a lot more contracts now if I really wanted to. But I'm not. All right. I have some of the extra money just sitting on the side, and then some is in the hedge. And I would honestly argue that, like, honestly, it's kind of enough if you're in these long dated contracts to even just like take half of it off the table. Like, and then just have it sitting on the side, and that way you still get the gain, or maybe even just 1/3 off the table, or like what I'm doing, like probably around 1/4 off the table. So you're still not missing anything if you do decide to tank, because look at this weekly chart. Like, who says, like, you're probably going to have days before it happens, but this weekly chart doesn't look good. But you could toy around here just like you did back here, but I would expect something's going to happen over here at this Jackson Hole Summit. And we do have the European, Sebastian tweeted it or retweeted it today. I saw he was, he retweeted something saying that the European, like, oil or something is up like 500% since 2020, which is absolutely insane. All right. And it was just a bunch of different prices they were showing, and everything is just all around and it was all for the different countries. And like everyone's screwed, and eventually the US is going to be screwed. And I also got to introduce this because this is something important that I was thinking about today, and I was going to make a separate video about it. But then I realized, okay, I can actually cover this in a few minutes, and I could just talk about this. All right. So I'm going to talk about why I don't think the Fed is going to Paul Volcker or anything. I think everything's going to get fucked because they can't do it. And here's why they can't do it. They're in debt. All right, they're in complete debt to just all, like, dude, the US debt is massive. All right, like, it's absolutely massive, but they're also in control of the interest rates they pay on that debt. All right, back when they Paul Volckered this shit, they didn't have the debt. They did not. The debt was not even close to what it is now. All right, right now they're paying a lot of fucking money on that debt each year. All right, and this is a whole debt-based system. So what happens if the US can't pay its debt? It defaults, okay, or it increases that credit limit, and then they print more money to pay the debt. So that's so I was like not arguing with myself, but I was like talking to myself in the car today, and I was thinking, like, okay, but wait a minute, they could just print more money to pay the interest payment on the debt, right? And first I was like, wait, who does the US owe money to? And it's like everyone, okay. We owe money to a lot of people. We just print the money before we give it to them, and then it inflates our currency. And yeah, that's so. But that's also the problem. Okay, yes, we keep printing money to pay off that interest payment, but in a lot of other countries are probably in debt. I got to look into, like, what is China's debts in that? What are all these other countries' debt? I know there's a lot of fucking debt. Like, the whole world is based off of the Keynesian theory or whatever, and it's all a debt-based system, which is designed to eventually collapse. Look at what is happening to SPY, okay? Did I cut? Where did I cut? Am I missing out on some? Nah, you know what? This is the emotions talking, okay? Yes, I would have made like a few hundred more bucks if I held. You know what? But I did what was taking my emotions out of the trade, and that I advocate for, all right? It was a solid move on my part. And yeah, I just acknowledged, I was like, dude, you have too much in SPY calls that you are letting your emotions get involved. This should be a thing where you can throw whatever you're, like, honestly, it should be looked at as a hedge. Like, okay, maybe that 5% of your original position turns into, like, yo, maybe it like fucking 5x's on you and it turns into 25%. And like, that's like added money that you get to throw on it after. So that's what your hedge did. All right. But what I was doing, all right, is just a little bit more. And I realized, like, pretty early there. I'm glad I did. But I do think, as you see, we do have this pennant here. But Bulkowski, how he measures these pennants is actually really weird. There's like no price target with just this pennant. I mean, there probably is, but not in the visual index, which is what I was looking at. If you come down to P's, where's the P's? Pennants, like, look at that. You measure them off of this, the thing down or the thing up, and this one's like sideways. But if you're measuring it like this is what I was thinking, like, holy shit, are we measuring it like that to the pennant? And then we're going like, oh shit, I moved the golden pocket, and then we're going like all the way down there, and we're gonna break down. And now I just didn't know how to measure it, so I was just like, okay, like, I know how wedges work. Like, the price target, the second price target is going to be here, and the first price target would probably be just about hit right now. But yeah, so I was playing it until at least around over here. But also, we do have this gap fill on the SPY daily chart, which is something that will honestly probably get filled, and that's why I have my hedge. I have my VIX hedge, though. I have the VIX puts. They're $23 puts. By the time we get to $21, where the VIX that VIX gap is, it's going to be great. Okay. And look at that. We have like a hanging man slash hammer candle on the VIX. Well, we have, I think it would be the reverse on the SPY. No, we don't. We have a doji candle. So that could be that. I mean, that's a candle of indecision. That could be a bottoming candle. That could be a continuation candle. I don't know, but that's why I did what I did earlier. And like, I'm still in the short, but I'm feeling much better now that I have that hedge, because I'm not going to go down nearly as much if we do start rallying. And at the same time, I get to sell the hedge and put the money that I have aside for that that didn't go into the hedge, and I get the hedge money to throw into way cheaper VIX calls once we do come down and fill this gap, right? Like, we're gonna get solid entries if we're getting to buy down here. Like, that's why I ultimately wanted to sell, and like completely I wanted to compound these gains to the max before our move actually happened on the VIX. But then I realized, no, that's too unsafe. Like, you have the risk of missing the move. You have the risk of like the move going, I don't know. Like, I mean, it just, I didn't want to miss the move, but I also knew that we were probably going to be filling the gap. And yeah, so I wanted to play that. Okay. But yeah, guys, I will catch you guys in the next video. That is pretty much it. We pretty much covered everything. We have the summit that's happening on Friday, and that's pretty much the most important day. We do have the jobless claims on Thursday, and that, guys, they've been positive for months now, if I am remembering correctly, which I believe I am. So that could be a positive factor on Thursday and Friday. All right. So, or maybe say we have a breather day Thursday and then pop up, and then boom, Friday is some bearish news and we go back down. I don't know. Or maybe we bottom, and maybe this means something. Like, I'm just saying, guys, we saw it happen back over here. We needed, for us to have a meaningful rally, we needed oscillators to come down and match our weekly time frame. And they did come down and match the weekly time frame. Well, now the weekly oscillators are up there. Well, the daily oscillators are all the way down there. So I'm just saying we're probably going to get a pullback. So that is what I'm expecting. Before we continue, and oh, I did not mean to do that. And you could just see, like, we're starting to cross up. And last time, if you come back to this move over here, and this is what makes me feel a little bit better about keeping most of the short position and just having the hedge instead of just not having all of it. All right. Look, we just kept going down. I didn't want to get wrecked by the move I was trying to do with the hedge, and then I also didn't want to get wrecked if we ended up going up. So this is a move that kind of works. I'm going to be able to play both sides, kind of like a strangle, I guess. But yeah, look. So like, look, we're like right here. And last time you were right there, you were right here, and then you went lower one more day, and then you popped up and you had the bull trap, and then you ultimately formed that higher high on your CCI and stochastic while you form the lower low over here. So I do think we're probably going to have a similar situation on our hands, and I don't think this weekly time frame sell-off is going to be starting yet, but maybe we end up coming back up, going into Thursday and Friday, and then that's what causes a sell-off. I don't know. Okay, I have no idea, but what I do know is, like, every other country is just shitting the bed right now, and it's going to get real bad during winter time for them, and it's probably going to be the same here if, like they're just bigger signals, okay? Like Jay Bravo's been predicting that the U.S. was going to go to shit. The U.S. economy was going to go to shit since last year because China's economy was going to shit. So, like, I'm just saying, it is highly probable that our economy is going to be in the same exact position as these other countries at some point in time, and it's only a matter of time until that happens. We're just like, we can just, you know, I mean, I'm sure other countries probably print the crap out of their money as well. Oh, they do. That's like how Venezuela became Venezuela. They do, but they don't have the power that the U.S. does. Whereas, like, every country is using their currency, so they really do have the power. But like I was saying earlier, like, the U.S. can't raise interest rates higher than inflation because they'd be completely fucked. Like, let's just see the U.S. debt. Oh, not clock. I want to look up clock. I want U.S. debt. Oh, I guess that is what this is. U.S. national debt. So now we're going to come down here, calculator. All right, and we're just going to do some math, right? Because things are sloppy here in the U.S. Like, it's bad, guys. This is terrible. And where's my calculator? There's my calculator. Dude, that's such a big number. Like 3.7. Look how much debt gets printed each second. This is crazy. Dude, this is hundreds of thousands being printed each second, dude. This is terrible. We're getting millions just stacked on top of this. There's nothing that can print money this quick. All right, like this is crazy, guys. I'm just saying this should not be still going up. All right, like I can't keep up with this shit. 600. I'm just gonna go like this, right? 100 trillion times 0.1. All right, 0.1. It's so we have thousands, millions, billions, trillions. It's oh, I could have just done the simple math. I don't know why I did that. Either way, guys, it's $3 trillion. $3 trillion fucking dollars. Like that is that's ridiculous. All right, we are negative to GDP. You guys can clearly see that here. We are not, like, it's not good. Now I don't fucking understand how they're actually doing this. Guys, look at this. Our GDP is actually going down by the second while this is going up. This looks so crazy, dude. Is it always doing this? Like, what? How do they keep track of all this? This is crazy. Either way, guys, $3 trillion it costs just to, yeah, just do that. And, oh, actually, yeah, I mean, it is negative to that, but they actually can't pay it off with a minuscule amount of that. They have 24 trillion here. But either way, guys, I mean, 3 trillion a year to service this debt. That's crazy. Okay, and that's if they raise it up to 10% interest rates, which would combat the inflation right now that came in at 8.7% or whatever it was last month. So I'm just saying, like, they can Paul Volcker it, but it will screw them. And if they can't help anything, then it's going to be like a Great Depression for like 10 to 20 years, all right? It's going to be bad. So, and I'm sure nobody wants that to happen. So they're going to do everything in their power to not let that happen. But at the end of the day, like, it's going to happen at some point. And we're just going to be in for the ride. I mean, guys, like 2008 is a reality. Like, we can be doing that at some point in time. I don't think it's going to happen right now. That I do not. I think it's going to happen next year. Or going into the end of this year, I guess. Or maybe, guys, maybe it does happen in September. Like I said, I have no idea. I don't have a crystal ball. I really don't. Okay, I can't look into the future, but I can keep looking at the charts and just adjust as I go. That's exactly what we're going to be doing. Okay, we're not going to really be doing anything else here on the channel. And yeah, all right, guys, with that being said, I will catch you guys next video. Peace.